Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, January 25th through Friday, January 29th, 2010. Well, folks, you thought last week was wild. Get ready for next week. Next week promises to be an unbelievably wild trading week as we get into more earnings. I talked in the beginning of the year to you guys in depth in these weekend technical analysis update videos about the volatility increasing. And I said that right around the beginning of the year to expect that. It has not been wrong, folks. We have seen the volatility absolutely insane. Last week alone, the Dow losing almost 600 points off the high levels it was early in the week as it tumbled the last 3 days of the week. Wednesday, Thursday, Friday. Now, that's all on the back of Obama, folks. Obama coming out with comments that he's going to be stricter with banks, that, again, the public wants it. He has to oblige based on the obvious elections that are going on right now or that are going to be coming up. We know about the election of Brown to the Senate in Massachusetts, the Republican. That was a major, major blow to the Democratic Party and Obama because it puts in, kind of test and in kind of unknowing levels whether or not he's going to be able to pass his health care, all his other things. Now that Republicans, again, there's no supermajority with the Democrats anymore in the Senate. Now, again, a Republican has taken place there of Ted Kennedy's seat. So, again, that's a huge blow. And you might say, well, why? I don't understand why the markets don't like that. Well, the markets are looking at it like this. Obama has been a friend to Wall Street, folks. There's a reason why Wall Street is up 75, 80% since the lows last March. All right, there's definitely a reason. And that reason is Obama has been a friend to Wall Street, a friend to the banks, allowing the Federal Reserve, the Treasury to pump money into the economy, stimulus money, pump it into the banks as free money from the Federal Reserve that they can lend out. These banks can lend out and make easy, easy money on. Changing accounting rules, you name it. These banks were basically the darlings of Obama and his administration. All of a sudden, a Republican gets put in power in the Senate, and that shows you that Wall Street and Main Street have collided. Officially, they have collided. Main Street saying, and again, this is the population of America, saying enough is enough. Enough being kind to the banks. What about the population? What about the American people? And sure enough, all of a sudden, Obama's forced to come out and start to talk tough against Wall Street and the banks, and again, that causing the catalyst for the fall last week. Now, with that fall came some dramatic news, earnings news. We got some earnings news again from Google, from IBM, you name it. Last week is a wild week. We got the banks reporting, Goldman Sachs, JPM, all the other banks reported last week, and it really wasn't anything amazing in earnings. I mean, earnings were solid, but nothing absolutely stunning on the upside. And I think that also worried Wall Street because now all of a sudden you have a situation where, earnings are good, but does it warrant, 100% increases in some of these stocks that have gone on? And that's the key, folks. It's all about where are these stocks priced and where will they go based on the earnings that were reported. And obviously, we've seen that it's gone down. Now, let's go over the technicals. I'm going to cover a lot of technical information today. I want to cover some key charts of like Apple and some of these other key players in the technology sector, as well as the financials and some of the other plays like ExxonMobil. But I first want to start with the intraday chart on the SPY. What you can see here clearly, folks, is that the SPY obviously took a tumble. I mean, we just go back 3 days here. I mean, look at this. Starting going back, here's Tuesday's close. We closed above 115, really at a triple top on the SPY, and I'll show you that on the 60-minute shortly. But from that, we gapped lower on Wednesday, came down, and then rallied back pretty significantly on Wednesday, although we did close lower. It was not a dramatic close. We closed down about 100 points on the Dow, but then it all broke loose, folks. Thursday, Friday, each losing well over 200 points. Essentially, the market down close to 600 points in 3 days on the Dow in a dramatic grueling of Wall Street. Now, the technicals themselves, you can see all the lines. I'm not going to cover in depth these lines because I want to spend more time on the 60-minute chart. I'm going to give you guys projections of what to look for next week as well so you can be fully versed in what to expect. The 60-minute chart is a fantastic chart, folks. If I had to teach off a chart, it would be this chart right here. Why? Because you have an M pattern, an A pattern, you have, double tops, double bottoms, you name it. It just is a perfect technical chart. If I could snapshot this to bring it to the future and talk about it 10 years from now, I would talk about this topic top in the markets. First of all, let's go back to the 11th. The gap up on the 11th is where I personally came out and I said, guys, I think the top is in. I'm sticking my neck out on the line. Now, the amazing thing about that, folks, and again, I do it because I read the technicals, but everyone else out there was bullish. I mean, every other service out there, TV programs on CNBC, on Bloomberg, everyone out there was bullish on the markets at this high pivot, and even up until really on Tuesday close, they were still bullish. And I stuck my neck out and said, that's the top, folks. That is the top. Based on the technicals that I'm reading, it's showing a 90% drop possibility in the markets from these levels. And sure enough, over the next 1.5 days, we pulled back. But you know what? The market rallied back up and retested those highs. And up here, all of a sudden, people said, wait, was Gareth, Gareth called the top here. Is that correct? Sure enough, it fell again. And people said, okay, maybe he was correct. And then all of a sudden, the market rallied right back up to that top again. And people said, wait a minute, they started to doubt again. He's usually about 80-90% correct on every call, 8 out of 9, 8 out of 10 calls correct. But here again, we're back to the highs at 115 and change. Could he be wrong? Sure enough, history speaks for itself. The market comes down, bounces, and then breaks down. Bear flag right there, and then down we go. Now, the thing that I pointed out to my premium subscribers early and mid last week was the formation of the MA pattern. Look at this. Up, down, up, down. There's your M. You see clear as a bell, your M. Here's your A, which happened to go right up to this 20 moving average, and look at the flush down, folks. There's your A completion. There's your M. There's your A pattern. When you have an M pattern and you start to see the move up of the A, you start to get very alert to the possibility of an A pattern playing out. A patterns play out to the downside in dramatic fashions, at least down this low, possibly even lower. As you can see, this one just ripped all the way down. But that is a perfect example of an MA pattern and what the results of an MA pattern are. MAs are very bearish. WVs are bullish. Now, in this situation, the other thing I want you guys to pay attention to is the fact that you had a beautiful channel here. Now, this channel was also pointed out by me to the premium members of the Research Center in the chat room, and I said to them, I said, guys, be aware that a channel like this, which is perfectly sideways, and again, you can see double bottom here, triple bottom right here, double top right here from this point to this point to this point, triple top up here. And the thing that I said to them, and this is another rule for you guys to take to your graves and learn and utilize in the coming months of the year, a trading year, and all the way into the future, is when you have a sideways channel, you might say, well, isn't that a neutral channel? I mean, it's perfectly sideways. The answer is no, it's not. You have to go to other factors to look at what the odds are on that for a breakdown or a breakup. Because many people were saying, oh, we have a channel, we're consolidating for a breakup. Yet I told my members there was a 75% chance of that channel breaking lower. Now, why did I know that? Let's talk about education for a second. The reason I knew that is because I have done studies, folks, and immense studies, my partners and I, chief market strategists here at In the Money Stocks, and I found out that when you have a sideways channel at the highs of the charts, meaning at 52-week highs, the chance of them breaking down is 75%. 3 or more of every 4 will break to the downside. That's a 75+% chance that that channel will break to the downside. The same thing applies at the 52-week lows. If you're trading at the 52-week lows in a sideways channel, let's assume this was at the lows, at the 52-week lows on a chart like back in March of 2009, there would be a 75% plus chance that that would break to the upside. Utilizing that percentage and add in the MA pattern, you have about a 90+% chance that the market was going to break down, and those are the odds that I gave to my members that we had, again, topped out here, and then right here you had a 90% chance of breaking down, and again, that is how I got to that call. Now, there's a lot of other calculations and factors, mathematics stuff that I do that, again, we teach in the webinar, the research center, the chat room, but again, that's the simply way to put it. Now, what are you looking for here? You have a lot of support at 109, folks. The key level for next week to watch is 108. 108 is going to be a very, very important level. You may hit it on Monday, although, as I told my premium members, I do expect a small bounce now off of these levels. You may go to 108, which is only about $1 lower than current levels, but at this point, you have to go into a neutral to upside bias for the short term early next week. All right, so watch for that to be a possible bounce play. I talked, and by the way, for those of you that want to see this, the video on Friday, I went over about 10 different swing trade plays that I had looked at, that some of them I had even taken a position on, and I had gone over these in depth in the video. They're going to be on the hot charts and alerts, some of them. They're going to be in the Pro Trader watch list. All of that's included in the Research Center, so I do encourage you just to get these plays in the very least. It is well worth it to join the Research Center and check it out. So again, that's what we're looking at here. Now let's go over a couple different plays. I want to talk a little about Amazon and Apple. Now why? Because earnings next week on Apple. Monday after the bell, Apple will be reporting earnings. Let's take a look at the daily. What is this telling us? And right away, I'm seeing some key levels here on the charts. All right, now what I'm going to do here is just scan back a little bit. I want to try to focus in. And it looks to me like I can see here a little bit of, let me just take a look here. Apple is into a little bit of support right here. If you connect the low here to the low here, Apple is definitely into some support. So going into Monday's earnings, it may get a little bit of a bounce prior to earnings. Watch that very, very closely here on Apple Computer. Now, again, if it gets through that level, you're going to have a major support line right here as well, and that would be at 192. But I do not, if I had to guess right now, I would guess that Apple does get a little bounce based off this trend line right here. You can connect this trend line to this trend line, and you might even pierce it a little bit, maybe go down another dollar or two on Monday, and then bounce back up. But I wouldn't be surprised if ultimately it closes positive on Monday. It could be right from the start that we gap up on Apple, or it could be by the close, but I would guess that Apple will close on Monday on the positive side. So watch that. Again, this trend line right here, you're at good support. If you get through it, the big level of support will come in there. Now, what would Apple do on earnings? Expectations are a little over $2. The whisper number is $2.30. So Apple, again, 208 is the estimate by the analysts. $2.30 is the whisper number. Watch revenue, watch margins too, and also watch for the debut of other products that they have coming out. Amazon reports later in the week next week. We got Google last week, we got IBM last week, we got Intel, and so forth. But again, Amazon reports on Thursday after the bell. The big level on Amazon for a buying opportunity is going to be right here, folks. All right, this is the big level on Amazon, right around the 111 level. You can see it's gap